Warren Buffett, one of the titans of global finance, did not start his race with a golden inheritance. Far from the image of the privileged, Buffett has sculpted his empire brick by brick, proving that monumental wealth is accessible to those who start from scratch. Today, we are tearing the veil on the illusion that only those who are born rich can reach certain heights. In this video, we will show you that even without a penny in your pocket, you have the power to accumulate wealth worthy of the greatest. Forget the excuses, throw the doubts into the fire, and prepare to embrace proven strategies that have propelled ordinary individuals into the arena of millionaires. The first 2 points will talk about the fundamental principles, and from the third point, we will see how to make your money work for you. 1. Start early. If Warren Buffett's story teaches us one invaluable lesson, it's the importance of starting early. At the age of 11, while most of us were maybe saving for a new video game or a bike, Buffett was already making his first investment. This precocity is not just a charming anecdote. It's at the heart of his philosophy that has shaped one of the world's greatest financial fortunes. The act of starting early in life to invest or to engage in any major project is not just an advantage, it's a success multiplier. Firstly, it gives you the luxury of time, allowing your investments to grow through the magic of compound interest. Secondly, it offers you the opportunity to learn from your mistakes when the stakes are relatively low, preparing you to make better decisions when the amounts become more significant. Finally, starting early develops a discipline and a future-oriented mindset that benefit all aspects of your life. Let's take a concrete example. If you invest $100 a month starting from your 20s, with an average annual return of 8% by 30, you would have accumulated approximately $18,293. Continue until 40, and that amount climbs to nearly $48,725. These figures are not just numbers. They represent the financial freedom and life choices that this saving could offer you. But don't think that this logic applies only to financial investment. A young person who starts paying attention to their personal finances from the age of 18 will have, by 30, a financial experience and maturity that someone who waits until their 30s to get started can never catch up with. And if you think you've already passed the ideal age to start, let me remind you of this Chinese proverb. The best time to plant a tree was 20 years ago. The second best time is now. So, no matter your age, the time to take action, to materialize those ideas that are running through your head, is today. Not tomorrow, not next week, but now. If you don't know where to start, reading is an excellent first step. In the description of this video, you will find a link to a free book from a successful entrepreneur, a valuable resource to ignite your mind and set you on the path to success. Do not let the opportunity slip away. Download it and begin your journey towards realizing your dreams, no matter what stage of life you are in. 2. Be frugal. Frugality. I can already see some of you rolling your eyes, murmuring, "Life is short, might as well enjoy it, right?" But wait, don't go yet. Frugality is not your enemy. It's your most loyal ally in the quest for financial freedom. It's not synonymous with depriving yourself of all pleasure, but optimizing every penny so that it works for you, not against you. Understanding frugality means recognizing the difference between spending for ephemeral pleasure and investing in lasting happiness. It means knowing that every dollar saved and wisely invested can turn into a much larger amount tomorrow. And here I'm not talking about magic, but common financial sense. Frugality allows for saving, sure, but more importantly for investing in what really matters. For a successful frugal life, start by distinguishing needs from wants. A simple tip: before each purchase, ask yourself, do I really need this? If after 30 days the desire is still there and justified, then consider the purchase. Let's take the concrete example of this woman I knew, Marie. With a modest salary, Marie managed to build an impressive nest egg. You might wonder how. By applying a simple rule. For every dollar spent on immediate pleasures, she invested 2 in her savings or investments. Here's the result. Less than 10 years later, Marie had amassed enough to afford a freedom few can claim. She didn't just save, She invested in her future, while living a life rich in meaning and experiences, chosen and not endured. So yes, life is short. But being frugal doesn't mean giving up life's pleasures, but choosing carefully where and how to spend your money so that every dollar counts. And if you tell me that you need to earn money to be able to save it, the third point is for you. But before I continue, I have a small request. Please take a second and like this video. This helps the algorithm see that this is useful content for people and recommend the video to a larger number of people. Thank you for doing that. All right, let's continue with the third principle. 3. Make good investments. Investing wisely is the foundation for building lasting wealth, a lesson mastered by Warren Buffett. His key philosophy is to never bet on what you don't understand. This is the basis of thoughtful investing, one that makes your money work for you and turns your savings into a growing asset. The first step is education. Before diving into the stock market, bonds, mutual funds, ETFs, or new avenues like cryptocurrencies, arm yourself with knowledge. This is absolutely crucial if you don't want to crash and burn. Online resources, books, finance courses, all of these can provide you with a solid foundation. Because in investing, knowledge is truly power. Don't think that you need to be rich to start. Online investment platforms now allow you to start with as little as $50. The key is to start and learn from real experience. Buffett's first investments, though modest, laid the foundation for his future success. Another secret to smart investing is diversification. Don't put all your eggs in one basket. Spread your investments across different asset classes and business sectors. This reduces risk and acts as a safety net against market volatility. If one sector fails, another might hold up, thus balancing your portfolio. So, to invest wisely this year, combine education, diversification, long-term planning, risk management, and stay informed about global trends. By following these principles, you can, like Warren Buffett, transform your savings into a growing asset and reinvest your profits to build lasting wealth. Investing wisely also means recognizing the opportunities offered by the digital age. I'm deeply convinced that everyone can be financially independent today. What most people lack is knowledge. With just a smartphone and an internet connection, the doors to entrepreneurial success open to you without needing a significant initial capital. On our channel, you will discover a multitude of ideas for generating passive income, even without a single dollar in pocket. And to go even further, we are preparing a detailed ebook that will dissect innovative investment strategies. So, stay tuned so as not to miss its release, as this ebook could well be the key to unlocking your financial potential. 4. Reinvest your profits. Reinvesting your profits is the fourth commandment for those who want to build a solid fortune. This rule is absolutely essential to accelerate the growth of your wealth. The idea is simple. Instead of spending your gains, you use them to increase your investments, thus creating a virtuous cycle of financial growth. Let's say you've invested in stocks that generate dividends. Instead of taking these dividends to offer yourself immediate pleasures, you decide to reinvest them by buying more shares of the same company or another with good growth potential. By doing this, you increase the number of shares you own, which means your future dividends will be even higher, and so on. This is the snowball effect. The same applies to any other business sector. Whether you're in digital, catering, service, or any other industry, the principle of reinvesting your profits remains a cornerstone of sustainable growth. When we start to see our business generate revenue, the temptation is great to use this money for personal enjoyment. After all, we've worked hard to get here, haven't we? It's human to want to enjoy the fruits of our labor, to treat ourselves to that trip we've always dreamed of, or that car that has been catching our eye for so long. But this can really be a big mistake. Giving in to the temptation to spend your first profits on immediate pleasures could compromise the future growth of your business. Imagine instead reinvesting that money into tools that could automate part of your work, allowing you to gain efficiency and productivity. Or consider using it to fund a marketing campaign that could expand your customer base and increase your revenues in the long term. This principle of reinvesting profits is universal and relies on the power of compound interest, often described as the eighth wonder of the world by savvy investors. The more you reinvest, the more your initial capital grows rapidly, thanks to the accumulation of interest on interest. 5. Cultivate your network. The fifth and final pillar to building a fortune, often underestimated but just as crucial as the others, is to cultivate your network. Financial success is not just a matter of numbers, wise investments, or frugality. It's also about the people you know and how you interact with them. In the world of business and finance, who you know can be just as important as what you know, because no millionaire has reached the top without the help of other people. Therefore, invest in relationships that can open unexpected doors for you. Strategic partnerships, privileged investment opportunities, wise advice from experienced mentors, or simply exchanging ideas with peers can accelerate your path to wealth. Warren Buffett himself has benefited from decisive meetings throughout his career, particularly with his mentor Benjamin Graham and his longtime partner Charlie Munger. To cultivate your network, start by getting involved in communities, forums, and events related to your interests and industry. Be generous with your time and knowledge. Never hesitate to help someone in your field who needs it, because the help you provide today can come back to you in the form of opportunities tomorrow. Use online platforms to expand your network beyond geographical boundaries and not to waste time. LinkedIn, Twitter, and other professional social networks can be excellent tools for connecting with opinion leaders and influencers in your field. Remember, the quality of your relationships is more important than the quantity. Authentic and mutually beneficial connections are worth much more than a wide network of superficial contacts. Take the time to nurture these relationships, to be present, and to listen. In the end, your network can become one of your most valuable resources, not just for increasing your wealth, but also for enriching your personal and professional journey. In short, if you combine starting early, a frugal lifestyle, wise investment choices, reinvesting your profits, and expanding your network, you have a formidable strategy for forging lasting wealth. Each element of this strategy supports each other, so you must not neglect anything. It's time to put these principles into practice without delay. And don't forget, to boost your start, make sure to download the free book we talked about. It's an invaluable tool that will guide you on the path to financial success. You will find it at the bottom of the description. Thank you for watching. Don't forget to like this video to share it with other people.